Okay, how long does it take to become a millionaire? On this video, I want to look at how much you'd need to put away and for how long in savings to actually save yourself enough money to become a millionaire. So it doesn't matter if you're talking US dollars, euros, or Great British pounds. You become a millionaire in any of those currencies and the figures will still match up. Now, we're not talking about winning the lottery or becoming a founder of an amazing business. We're simply saying, okay, what is it? What would be for the average person, for an ordinary person, just to be able to reach a millionaire status? So obviously on this, time is going to be a big factor. You've probably seen the videos. Compounding is really powerful. If you can get a percentage return and you compound that over time, that can really escalate returns. But let's have a look at the actual real numbers here. So on my spreadsheet, we've got total savings. And we're talking an annual percentage return of 4.8%. Now you may be wondering, why have I picked 4.8%? Looking at the historical performance of the FTSE 100 index. So assuming you just track the FTSE 100, that's the biggest top 100 shares in the UK, and this will be applicable for other countries as well. But the compound annual growth between April 2000 through to June 2024 has been 4.8%. And you can see the chart here. If you started with £10,000 in April 2020, then by June 2024, that would be worth £31,000. So I think that's a reasonable figure to go with, the 4.8% per year. Based on the FTSE 100. Why do you think you could outperform the FTSE 100? Well, that's up to you, but we're going to just pick some numbers here, some what I consider to be very realistic. This is based on real hard life data. So let's have a look, and what we want to do, we want to achieve total savings of £1 million, $1 million, 1 million euros, whichever currency you're interested in. So we're going to look at, if we return 4.8% per year, and we invest that money for 10 years and we make a monthly investment every month, how much will we need? You might want to sort of pause the video here and guess, how much might you need if you're wanting to retire in 10 years time? So perhaps you're 55. How much would you need to save if you had a target of £1 million? Put in the figure there, you can see you would need to save £6,509 per month every month for the next 10 years, with achieving a 4.8% return per year. That would get your total savings to £1 million by the age of 65 if you're currently 55. Now maybe you're in a slightly more blessed position of saying, well, actually I'm only 45, so I've got 20 years before I need to retire. What sort of figure might I need to save on a monthly basis to achieve my £1 million target? Again, you might be surprised by this if you're just guessing what the figure will be. It's less than half that figure. It's 2,490, and that's the power of compounding that money over that length of time. So the 4.8% working on your first investments, your first savings 20 years ago, or from now into the future for 20 years, then it's less than half the amount. If you're really planning ahead, you might have 30 years, you might be 35. What would you need to get to £1 million in 30 years from now? You would need to save £1,247 per month. Still quite a considerable sum of money for 30 years, every month, 1,247, generally out of reach of most people. Let's look if you've got 40 years. So you're just 25 now, you're starting out in life, you've perhaps graduated from university, you're wanting to say, okay, right, let's plan for the future. What will I need to get £1 million at the age of 65, just being 25 now? You'd still need to put £670 per month, which is still a considerable sum of money for most people. And remember, if you're only 25 as well, £690 a month, every month for 40 years, that's quite a target to achieve. Let's look at 50 years. If you're currently 15, perhaps you've got teenage children and you want to help them get to that point. Still £401 per month, every month for 50 years to achieve the £1 million millionaire status. And now if we look at for 60 years, You might be talking grandchildren rather than children here. So you might want to put some money aside if you've got grandchildren to help them get to the point where they can retire comfortably at age 65. So if they're just 5 now, you'd still be looking at £239 per month every month for 60 years for them to achieve millionaire status, assuming typical returns on the stock market. Now you may be saying to me, Paul, but what about inflation? If you're talking about 60 years, what's that £1 million be worth in 60 years time? It may not be worth anywhere near as much. So yeah, we've looked at these figures here. So let me just bring these in now. Let's just change the color so you can see these. So what we've got here, I've added in inflation at 2%. So if inflation was 2% per year, £1 million today in 10 years time would be worth 820,000 in today's value. So here's the alarming part. If you were saving for 60 years at £239 per month and you were achieving 4.8% growth per year on those savings, if you've got inflation at 2%, the total value in today's money is just £304,000. So for 60 years at £239 a month, you're not going to achieve what is today millionaire status. You would be a millionaire, but it would only be worth about £300,000 in today's money, which is just over the average UK house price. So for 60 years at £239 per month. So if you still wanted to achieve in today's terms millionaire status, how much do you think you might need to save to still, taking into account inflation, millionaire status? It's actually £3.3 million. So in terms of monthly savings for a 5-year-old today to achieve retirement with £1 million in today's money in the bank, you would need to put £790 a month every month for 60 years, achieve the 4.8% growth. In total, you would have savings of 3.3 million at the end of that, which is in today's terms the equivalent of £1 million. So that is a real stretch and probably completely unachievable for most people. And this is something which I think is really quite sobering. A lot of people have the idea, the notion, yes, I want to retire as a millionaire. There's the FIRE campaign, you know, save up money, invest it, get those returns. Well, this is the FTSE 100. You know, if you can outperform the FTSE 100, fantastic. And in fact, I will show you an option for doing that in just a moment. And it's important to be able to do that because the reality is, for most people, we cannot save enough per month in a lifetime, even over 60 years, even with a decent performing fund, tracking the FTSE 100, you're still going to fall short of what you would really desire. Let's say you did, just for 60 years, let's say you aim for a target of £250,000. In today's terms, that would be £76,000. Not enough to achieve a life-changing income, but that's still £60 per month, every month, to be able to do that. So let's jump in and give an alternative option here. I'm also a general manager of a club called VCCrowd. Now, VCCrowd invests in private equity in startup companies that are not on the stock market. And if we just go and have a look at the statistics for private equity, we're on Investopedia here, and this article, how do returns on private equity compare to other investment returns? With private equity, here's the key takeaway. Private equity produced average annual returns of 10.48% over the 20-year period ending June the 30th, 2020. So a much higher performance than stock market companies. Stock market companies are safer, they're more established, they will be bigger, there's less risk associated with them, but the returns are lower than with private equity. So VCCrowd, as a club, what they do, act very much like the dragons on Dragon's Den or sharks on Shark Tank. They go and invest, the club invests in young startup companies who've got that big potential for huge growth. So really focusing on the growth side of things, where if you pick a company, let's say that's worth £5 million today, a small company, maybe with half a dozen employees, but is in a growth sector, even before they get to the stock market, let's say they get to the stock market at a 500 million valuation, you're talking 100x return on your money. Now, you don't need many of those winners to counter that most young businesses, startups will fail. And that's the point of VCCrowd. You're spreading your risk because you're part of the crowd, so you're not making that personal investment. The club makes those investments, and it can produce some pretty good results for you. So let's have a look again. How long does it take to become a millionaire? If you are saying we've got 10 years, let's pump in the figures again. Say you've got £1 million is your target. £6,509 is what you need to invest every month if you're just simply going to go for the stock market at 4.8%, and you've got 10 years to that. So if you're currently 55, you want to achieve £1 million by the time you're 65, that's a huge amount of money. Now let's say you split that, rather than just putting it in the stock market, very safe, very solid. I'm not saying you shouldn't put it in the stock market, but let's say you put 70% of that in the stock market and 30% in private equity. So in companies before they've got to the stock market or not on the stock market. Now, one thing to bear in mind with private equity, when you're invested in a company that's not on the stock market, you don't get this variation of price that's varying every 15 minutes. With a private company, that will go through step change. So it will have no change in valuation for quite some period of time, maybe even several years. Then all of a sudden, it's got a takeover from a big competitor. And that takeover, let's say it's a drinks company. So one of the companies that VCCrowd invested in is called Happy Drinks. And there's no change in the valuation of that unless they're either raising extra funds to increase their growth, or they get a takeover from another company, or they list on the stock market. At that point, the accountants will revalue the business and say, well, okay, if this is going to get a takeover, at the moment that business I know is worth £67 million. It could be that Schweppes come in and say, we want that business, we can see that's a real growth area, we've got some strong brands there, we'll buy it out for 670 million, so 10 times the current price. So all of a sudden you go from a normal set price of 67 million, goes up tenfold in an instant because another company is wanting to buy it out. But that's a bit of an aside, as just in terms of private equity, if you're not used to private equity. And again, with private equity, whilst I've mentioned it, it's very, very difficult to get into that sector unless you are an ultra high net worth individual anyway, or you do it through the crowd. So let's have a look. Let's take this £6,509 that you have, which would be your target if you were to achieve £1 million at 4.8% per year in 10 years. Let's take 70% of that into the stock market. You want a safe, solid growth, something you know is reasonably reliable. So you put 4,556 of that in the stock market. The other 30% you put in private equity, so 1,953 per month in private equity. You look here at the end of your time with the stock market. Understandably, 70% of your money has gone to the stock market, so you're going to achieve 70% of the 1 million target at the 4.8%, so 700,000. But what you've got with your private equity at 10.48%. Your assets in private equity are not 300,000, they're 411,000 after just 10 years. So you've now got 1,111,000. So you've got a bigger return because you've put a proportion of your assets into a higher risk, higher return environment. Now, even if your private equity funds didn't perform anywhere near as well as the 10.48, even if they only achieved the 4.8% of the stock market as a whole, you still achieve your £1 million goal. So let's have a look at some other figures. Let's go, let's look at the 60-year. So again, if you were investing for your children or grandchildren, you would be looking at £239 a month for 60 years every month to achieve your £1 million, which, like I said, in today's terms, taking into account inflation, is £304,000. If you look at what happens with that period of time, again, because of the power of compounding and putting some money into private equity, we can see here we take the £239, 70% goes into the stock market, 4.8%, that would achieve, again, your £700,000 over the 60-year period. But if you put just £72 a month in private equity at 10.48%, your private equity fund at that point, even though it's only less than half the amount you're putting into the stock market, rather than £700,000, has grown to £4.3 million in private equity. So in total, you've achieved your assets of 4.9 million. So if we look back at 4.9 million, so let's just go to 5 million, that is equivalent in today's value of 1.5 million. So you've achieved more than that goal of your £1 million status by having put some of your money into private equity. Now, personally, I think this makes a huge amount of sense. People fall into this camp of saying, I invest in the stock market, nothing else, or I invest in real estate, nothing else. You've got to have diversity. And so it makes sense, if you're going to put some money into investments every month, you should, I personally believe, consider having some in higher risk, higher returns, because ultimately, if we go back to this figure again, at £1 million for 60 years, that's your target goal. It's still £239 a month, and you're only going to achieve £304,000 value in total. So in real terms today, £239 a month, every month for 60 years. That is a really big challenging ask for a 5-year-old to do. So you've got to do that for your grandchildren or for your children. To be able to do that for 60 years is a real challenge. And even then, you know, it's not going to produce spectacular returns. However, if you put some of your money, so if you did do £239 a month, if you put 30% of that into private equity, then you stand a far greater chance of actually achieving a life-changing return over that 60-year period. And like I've shown, it's the same even just on a 10-year period. It still makes sense, I think, to put some money into some private equity. So there's a link in the description if you'd be interested in joining VCCrowd. Once you've seen these figures, how long does it take to become a millionaire? It takes a lot of money, a lot of patience. And you also, just one final thought here, going back to the FTSE 100 chart, 10 years, you could have started in April 2000, and 10 years later at 2010, so if we go to March 2010, you're only up 20% there, because the market was generally pretty flat, and that's the FTSE 100 over 10 years there. So it may even be that even in the stock market, you could join, you could say, well, I want to achieve my goal of my £1 million within 10 years. You may find that the stock market itself performs abysmally on that particular 10 year. And this is one of the problems we've got with stock market and any long-term investing of any description. You could go into real estate, put money into property. So I want to rent properties. On a property, let's have a quick look at that. Let's say you want to buy a £200,000 apartment or flat to rent out. You're going to need a 10% deposit, so £20,000. So even though you're putting £20,000 up front, you might be just before a market crash, and the market might crash 20%. Well, 20%, you've leveraged your money because you've borrowed £180,000. You're going to lose 20% of your £200,000 asset. So you've lost £40,000. You've risked 20, but you've lost £40,000 for a 20% adjustment in the market. So even real estate and housing markets can be incredibly risky. And in 2008, we saw many people lose millions because of the leverage of that position. Anyway, like I said, there's a link below in the description, so you can join VCCrowd. We'd love to have you in the club. It's very affordable. The club does all the hard work, gets you into private equity, gets you into startup companies that are not on the stock market you otherwise wouldn't have access to. And hopefully that makes some sense as well. But let me know in your comments, what do you think? How much would you realistically be able to put aside every month? What's your goals? What's your aims? Obviously you can reduce your outgoings. That may be another argument you want to take there as well. But let me know your thoughts on this video, and thanks for watching. Do subscribe to the channel if you want more tips and ideas on putting your money to work. Thanks for watching.